Warning: the horrible economic crisis where everything will collapse. Warren Buffett. The intelligence that Warren Buffett has on the forthcoming inflation and its enormous effects on the planet. What exactly is causing this economic situation to be so terrible? Welcome back to Finance Basics. Well, investors, lawmakers, and ordinary Americans are all concerned about inflation, so let's dive in for more details. We can sense it at the gas station, the supermarket, the post office, and even the barbershop. Because inflation's higher than the pace of economic development, the real GDP for the first quarter of 2022 fell by 1.4% year on year. If we receive another negative result for the second quarter, the United States will officially be in a recession. Recently, both Warren Buffett and Charlie Munger addressed the annual shareholders meeting of Berkshire Hathaway. Here's what the long-standing chairman and vice chairman stated, as well as how Berkshire is preparing to weather the storm. As an inescapable outcome, both Buffett and Munger expressed concern about the status of the economy as a result of inflation, which they blamed on tax, fiscal, and monetary policies. The policy artificially boosted demand, resulting in a supply-demand imbalance, which was treated by raising prices to try to reduce demand. And the solution now appears to be boosting interest rates in an attempt to limit demand. We're witnessing a release of the fact that we just shipped a lot of money one way or another, Buffett explained. However, Buffett and Munger saw inflation as a necessary side effect of bringing the United States out of what could have been a COVID-19-induced slump. We've got a lot of inflation, which was practically unavoidable if you're going to give out the type of money we did. And it's probably a good thing we did it. In fact, I believe that at one point when the Federal Reserve was generating money, our lives would have been far worse if they hadn't. That was a significant choice, Buffett stated. Munger stated in another discussion, it happened on a never-before-seen scale this time. Those checks are simply mailed to everyone who claimed to have a business and workers. They most likely soaked the country in money for a spell, and as Buffett remarked, they most likely had no choice. Jay Powell is a hero in my book, Buffett remarked. It's easy. He did what he needed to do. Look for value wherever it may be found. Looking for possibilities that would not otherwise be available is one strategy to increase wealth during inflationary times. The secret is to have a lot of experience hunting for those possibilities in different economic scenarios. We rely on mispriced firms through systems in which we are not accountable for their mispricing, Buffett explained. Buffett stunned investors by revealing a 9.5% stake in Activision Blizzard. As of Friday's close, the stake was worth almost $6.2 billion. Before Microsoft announced its acquisition of Activision for $95 per share, Buffett controlled nearly $1 billion in the company. Buffett then expanded Berkshire stock as a typical arbitrage opportunity, assuming Microsoft is a dependable bidder who would complete the transaction. Given Activision Blizzard's current stock price of $75.60 per share, that arbitrage potential is substantial. Buffett's Activision Blizzard investment is just an old-school approach to discovering the value in a different market. Regular investors, on the other hand, should avoid these types of investments because the deal isn't based on fundamentals and might fail. You don't want to end up owing a firm that you don't understand and didn't want to begin with. So what are your options? Well, let us know what you think in the comment box. And take a cue from Buffett's conduct. It's all well to declare that inflation is inescapable. The true dilemma for many investors, though, is how to structure their portfolios for extended inflation. Economic cycles are normal throughout a long investing career. It's secondary if inflation causes a sell-off. In firms with bright futures, good cash flows, and sturdy balance sheets, a bear market can yield life-changing riches. Berkshire's activities imply a heightened buying appetite we haven't seen in years, notably in the energy sector. In less than a year, oil and gas allocations grew. Chevron is Berkshire's third largest holding, while Occidental Petroleum is a top 10 holding since Berkshire boosted its share in February and March. Berkshire also bought HP this year and Insure Allegheny, showing its value stock bias. Chevron's industry-leading balance sheet and low production costs allow them to break even with oil in the 40s per barrel. Chevron has a lower break-even than Occidental Petroleum, which spends more. Oil and gas prices are at 8-year highs, thus its high capital expenditures have paid off. Berkshire's other key holdings are Apple and Coca-Cola, which are recession-resistant and stable passive income streams. Overall, Buffett's actions suggest that Berkshire Hathaway is discovering more value in the market than it has in years. But Berkshire isn't just buying a stock at a discount. It involves buying firms that either contribute to inflation or have relatively consistent cash flows and cheap values. Well, it is time for us to wrap up today's video, friends. We hope you liked our video, and if you did, smash the thumbs up button and let us know any questions and comments you might have. And yes, please don't forget to press that bell icon and subscribe to our channel for more exciting videos. Thanks for watching!